Welcome to the Wall Street Geek, where to err is human, but to be a geek is divine. And to help you become better informed about important money matters is my mission. But first, this is part 2 of investing in penny stocks. Now in part 1, I ended by discussing a 2-step process that may help you get around the fact that there usually isn't enough historical, technical, or fundamental information about a penny stock to make an informed investment decision. And the information that's available for a penny stock trading OTC or other may not be the same quality of information that you would find for a stock trading on a major exchange due to the fact that regulations on reporting are less stringent for stocks that aren't on major exchanges. It's like comparing a police force in New York City to a police force in rural Texas, and I can compare it because I live in New York City and I grew up in Texas. Both areas are policed, but the police forces in the major cities are way tougher than they may be in a rural area. I mean, I don't have personal experience with that, but it's probably a fair observation. So despite this, you want to try your hand at trading penny stocks. Well, here's a 2-step process that you may want to use to pick a stock to trade. As with all types of investing, you have to have a goal that directs your process. I'll break it down into 2 types of goals. So 2 types of goals and a 2-step process for each goal. Now first, say your goal is to find the next big thing. Now step 1, pick an industry that you know so that you can predict what will catch on. For example, I love technology. I used to write portfolio risk analysis and trading software, and I continue to love software and gadgets. I also enjoy science and health, like Guess Who's Doing P90X, and I have 2 black belts. So given these natural interests, I naturally follow the finance, technology, and biotech industries. Step 2, research that industry and stay on top of the news in that industry. Now go to Bloomberg.com, read the Wall Street Journal, whose editors select the Dow 30, and perhaps drop by my newly redesigned website, thewallstreetgeek.com. You're always welcome. And pair up this research with a stock picker. They're free online ones like at Yahoo Finance or MSN Money Central. Some stock pickers are based on technicals and some are based on fundamentals like Petrosky or Benjamin Graham's technique. Now use those to search for penny stocks within the industry of your choice. Some parameters you can use to search by are stocks whose market cap is between 500 million and 300 million, and also search for stocks whose price is less than $5. You also want to search for growing earnings per share to weed out those companies whose stocks are sinkers or stinkers. So that was already 2 steps. Pick an industry that you know, and research by staying on top of the news and using a stock picker to help you weed through the 65,000 publicly traded stocks worldwide. Now I've got a bonus step. Perform a fundamental analysis for value and growth potential. And this is an extra step because you won't always have the data to perform a good fundamental analysis on a penny stock. But ideally you want to find a stock that's undervalued, one that perhaps hasn't caught on yet with investors, and whose price is lower than what it's really worth. In that case, it'll be spring-loaded to take off in price when the rest of the market catches on. Some suggestions on doing the fundamental analysis include looking at the PE ratio, which is one of the top measurements of value. Compare that to the average PE of other companies in that industry, and if it's much lower than that average, you may have found an undervalued stock. But don't stop there. Also check future growth potential. Compare the expected earnings to the cost of shares in the market. Now you can figure out expected earnings by looking up what an analyst says, or you can take the earnings per share and multiply it times the shares outstanding. And you can figure out the cost of shares in the market by multiplying the shares outstanding by the current market price. If the expected earnings is greater than the cost of shares in the market, the company may be planning to have increased sales in the future, which may drive up its stock price. Now, a big reason why this research is important is to prepare yourself for what's going to happen after you buy. Now, guess what? It will go down in price. But if you were lucky enough to find a good one, it will go back up. Now to protect yourself, create a stop order that'll automatically sell once you go below a certain price. That way you don't have to watch the price and deal with the emotional decision of staying in or getting out. Decide that ahead of the time, not when you're in the moment. Now, those last steps were if you wanted to find the next big thing for the long term. Now, what if your goal is just to make some quick cash? The odds of this happening are around the same for if you bought a lottery ticket, but at least in the stock market, I feel you have a little more control to improve the odds. Nevertheless, it's still difficult, so don't trick yourself into thinking that you'll be the next market billionaire. Too much realism? Anyway, with this goal, you'll focus more on the technicals like day traders or swing traders do. And with this goal in mind, here are your 2 steps. Now, step 1, use a stock picker to help you find a penny stock candidate. And step 2, analyze the chart with technicals that you've seen do a good job of predicting price movement. Now that's the tough part. Now, one example is when the 50-day exponential moving average crosses the 200-day. You may see a bump up in price for the next 1 to 2 days. Now also watch for a simultaneous increase in volume, which may imply increased interest in the market. Now when you're ready to buy, figure out the number of shares to buy and a target price, either to make a profit or to preserve your capital. And be sure to factor in commissions and capital gains taxes when calculating your profit and loss targets. That's always forgotten. And finally, you may want to use a stop and limit order to protect yourself because the price of a penny stock can move in a very disjointed manner due to the lack of liquidity. Now the key here, if your goal is to make quick cash off the technicals, is not to hold for too long since your investment isn't based on long-term fundamentals. In a nutshell, depending on your goal, your 2-step process may involve fundamental research or technical analysis. Now, here are some overall tips for buying penny stocks. Now first, penny stock prices can be very affected by the movement of the market. In other words, they usually have a high beta, a concept covered in a past video. The general market has a beta of 1. That's synonymous to a person who doesn't have caffeine in their system. That's not me. NASDAQ tech stocks often have a beta around 2, maybe a little more, which means that it's more volatile than the overall market, synonymous to someone who's had a cup of coffee and is a little more reactive to news that impacts the overall market. The average penny stock may have a beta of 4 or higher. It's like 2 double espressos, very sensitive compared to the overall market. There are established companies that can also have high betas, like Google, but usually it's the penny stocks that have it. Another tip, spend time getting to know your stock. This is known as paper trading. Watch its chart and track how it responds to news, and use that as a time to test your technical signals to ensure that you could depend on them and have confidence in these signals in the future. Also, a very big tip, if a stock used to trade on a major exchange like the New York Stock Exchange and was delisted to trade OTC or pink sheeted, you may want to stay away. This kind of delisting means that it didn't meet its financial regulatory standards and is likely on its way down. It's like the stock tried to renew its country club membership, but it bounced the check. You want to catch a stock on its way up, not on its way down. Finally, one last huge tip, beware of message boards and also of stock gurus. People may spread good news in order to get other people to buy and drive up the price of a stock so that same guru can eventually dump the stock at a good price. So beware and be wary. Yes, penny stocks are risky, and yes, occasionally you'll invest in an awesome one, but don't use money that you need because, like I said, these are unpredictable and risky investments. Nevertheless, trading penny stocks can be fun, and like buying a lottery ticket, you may get lucky, but you likely won't. But in the process, you may learn more about the market and sharpen your trading and research skills without breaking the bank on a large investment. Plus, like a lottery ticket, it's fun to dream about hitting it big, and in this economy, it's always nice to be able to dream. I hope you enjoyed this video. There's definitely more to come. Thanks for watching, and until next time, this is the Wall Street Geek, hoping that you live long in profit. Bye.